those red areas, and this is some research from Freddie Mac, red areas are where population is moving out, green areas where population is moving in.
It's time for the U.S. Housing Market Report. Today we're joined with special guest Rick Sharga, founder of C.J. Petra Company, a market intelligence and business advisory firm in the world of real estate. You've seen him at Attom Data, RealtyTrac, and many major news sources have turned to Rick Sharga for his perspective on the housing market. He'll be joining Dennis Walsh, custom home builder, educator, expert, and my dad, and me, Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers make the best data-driven decisions in this crazy market. We're going to run through interest rates and affordability, projected home sales for the year, inventory levels, where everyone is moving to and where everyone is moving from, and then bold predictions for the U.S. housing market for 2024. So if you're ready to dive into the U.S. Housing Market Report, hit that like button and let's get started.
So it's been an interesting year in housing, to say the least. Let's jump right in and take a look at where we've been for the year of 2023. No surprise to anybody who's watching this, but mortgage rates, even though they've come down a little bit in the last week or so, are still near their 23-year highs. As recently as the late part of October, we were looking at interest rates for a 30-year fixed rate loan of almost 8%. And over 7% for 15-year fixed rate loans. A far cry from the 3 and 4% interest rates we were seeing about a year ago. And if you go to the next slide, you'll see the impact this has had on the housing market. And this is some research from John Burns, who does excellent work on the real estate market. But we've had 28 million potential home buyers priced out of the market by these higher mortgage rates. Just a phenomenal drop off. If you go back to when we were looking at 3% interest rates, about 50 million households would qualify for a $400,000 mortgage. And they chose $400,000 because that's roughly the median price of a home sold across the country today. When you got to 7% mortgages, about 27 million households would qualify. So you removed 23 million households from the equation. And at those 8% mortgage rates that we saw a couple of weeks ago, only 22 million households would qualify to get a loan.
So less than half of what we had at the 3% interest rates can now qualify.
So on the one hand, that probably presents some opportunities for rental property owners and investors because these folks all have to live somewhere, but really decimated demand because of this high affordability. And what we'll see is the impact that's had on home sales. We're looking at information from the National Association of Realtors and 2022 and 2023 home sales year to date. And 2022, the blue bars, is a really unusual year. I've never seen a year that looks like this, although there might have been some in the past. I'm just not familiar with them. But January was the month where we had the highest number of home sales for the year. And every subsequent month, we sold fewer homes than the month before. That means we basically wiped out the spring and summer selling season as those mortgage rates climbed up. And it was just a very unusual year. We would be having the same sort of year in 2023, except that January at the moment looks like the weakest month of home sales for the year. But after a little bit of an uptick in February, we've seen every month since go down a little bit. And in September, we're off by about 15.7% from last year. September represented the 25th consecutive month where we sold fewer homes than we sold the year before. And it's a trend that doesn't appear to be stopping.
I can attest to this as a real estate agent,
Yes.
Actively out there in the Southern California market, seeing, and I do local market updates for Southern California. And you can see, especially when you compare it to years past, more normal years, 2018 and 2019, we're off 40 or 50% from those years in the number of transactions and number of homes sold. And you can feel it out there. The whole industry feels it.
Yeah, and California's probably been hit a little harder than some other states, and that's not unusual. When market conditions shift in housing, California tends to be a little bit more volatile than other states. California being one of the few states where real estate is a recognized religion. So it's kind of part of our DNA. But if you went back to the beginning of the year, I was forecasting we'd see between 4.3 and 4.4 million homes sold this year, existing homes. And that was down from 5.2 million last year and from 6.1 million the year before.
Yeah.
So to your point, Christian, the sales have been falling. Turns out I may have been too optimistic. We're probably going to come in under 4 million homes sold this year, which would be the lowest number of houses sold in the country since 2008, when we were entering the Great Recession. So a really significant downturn. And it was partly because of affordability and partly because of lack of inventory. You simply can't buy what's not available for sale. And this is some data from Altos Research, which is part of Housing Wire now. And if you look at 2023 numbers, they do this weekly. You can see that the last week that we had published data for, there were about 563,000 homes for sale across the country. That sounds like a lot, but it's only about a 2.5-month supply. And in a normal market, we'd be looking at about a 6-month supply. Right. If you go back to 2019, and you were saying, Christian, that was probably the last normal year we've had in terms of home sales. We're running at about half of the inventory that was available for sale back then. The real challenge right now is that, according to Freddie Mac, about 2/3 of homeowners with a mortgage have an interest rate of 4% or less. Right. And it's not that people are picky and that they don't want to trade in a low price mortgage for a high priced mortgage. It's math. They can't afford to. Imagine that you're sitting on a 4% mortgage and you sell your house and buy another house at exactly the same price. You've just doubled your monthly mortgage payments. Right. And most people simply can't afford that kind of financial hit. So until we see mortgage rates come down pretty significantly, and I'm thinking probably the low fives, we're just not going to see a lot of this inventory come to market. What you're seeing come to market right now are homes from people that feel like they have to sell. Great. Divorces, deaths in the family, job loss, job transfer, things like that.
I can attest to that as well. My current listings, one is there was a death and now they're downsizing. Two of them are people that are selling to pay for care for an older family member. So that's an interesting trend as well. Yeah. That squeeze generation where you're basically paying for the care of your parents. At the same time, you're still paying for your kids.
Rick, just to add too, you talk about that 5% interest rate now being the magic number. But it's interesting, as you've studied, you and I both watched it for many years, and Christian as well, but you see that number changes, of course, relative to where those interest rates are. And I just saw a survey substantiating what you're saying, just a recent survey. A lot of consumers out there eager to move into the market saying, when we see 5%, that'll be the time I'm ready to move. But I can remember so clearly back to the 80s when I was building homes, and Teresa had just gotten her real estate license. She was working at a bank that offered mortgages. I remember interest rates. I'm sure you remember when they were up in the 18% range for a 30-year fix. But we still sold homes. There was still real estate activity. There was still that undying desire for some people to own a home, no matter what, although obviously affordability, the cost of homes, all that relates. But I remember sitting around with builder friends praying for a 12% rate. Yep. And then Teresa always loves to share the story where her lender once a year for a few years would offer an 8% mortgage rate to first-time buyers. And people would camp out, be outside that bank for a couple of weeks. They'd have a tent city as people hope to get that 8% rate.
I've raised that point at conferences and in podcasts like this or webcasts like this. And the pushback I usually get is, yeah, you had an 18% mortgage rate on your $70,000 home.
Right, that's right.
And everything is relevant. Yeah. Dennis, the issue here is that the Federal Reserve did some things in an effort to prevent the country from going into a deeper recession or even a depression due to COVID, and overcorrected, which they're prone to do. And when you got down to the Fed funds rate being at zero for a number of years and them putting billions of dollars at work buying mortgage-backed securities, buying treasuries, it drove those interest rates down to historically low levels on mortgages, probably artificially low levels.
Right. Yeah.
And just about everybody who could refinanced.
That's right.
And in those 2 years, you probably sold 12 million homes. So you're just sitting on a huge number of people who tapped into that artificially low mortgage environment and simply can't afford to get out of it right now. So the fear I have, candidly, is that as we see mortgage rates tick down, and they're likely to do that next year, we'll see more buyers come to the market before rates come down low enough for people to start listing their homes for sale, which is going to cause home prices to go up further.
Exactly.
So it's going to be an interesting market. And you're in the theme of everything old is new again. Wait until we start talking about new homes And I'm going to come back to something you just
Okay.
said about your builder friends. And I was just talking about this a little bit. Home sales are way, way off, but supply has dropped even further than demand. As people really aren't bringing their properties to the market. And what that's resulted in is home prices actually going up year over year. So we had a lot of people worried about a home price crash. We still have a lot of people on YouTube who are breathlessly selling their service in order to have people ready for this crash that I just don't see any way is going to happen. FHFA is the entity that controls Fannie Mae and Freddie Mac. So this is prices on properties that are sold with those 30-year conventional, fixed rate kind of vanilla loans. And year over year in that category, property prices are up 5.6%. If I'd shared this chart with you 2 months ago, the Pacific region and the Mountain region were both running negative year over year, but by the slimmest of margins. But even they've come back strongly over the last couple of months. NAR, Case-Shiller, FHFA, whichever price index you're looking at, we saw home price appreciation dropping pretty rapidly from the beginning of the year until about June. And then it reversed course. And so we've had several months in a row now where home prices have actually gone up.
And I will say for Southern California, all counties are up year over year for median home price. And Orange County is uniquely up. They're actually above that peak that we had in April. That's where, when I pull the median home price, it shows a peak in April of 2022. So Orange County is above the peak. Some of the others are still slightly below that peak. But last year at this time, we saw the prices dropping unseasonably fast, and they've now increased this year unseasonably.
The normal cycles have been just destroyed by what's been going on in the mortgage market. And you just mentioned California. I look at California numbers. This is data from the California Association of Realtors. Really is a microcosm of the U.S. market. Home sales are off year over year in the month of September by 21.5%. Year to date, we're off almost 29%. Look at that. The median home price, on the other hand, is up 3.2% to $843,000. And people ask me what that means, and I tell them it means neither of my kids will ever be able to buy a house in California.
Sadly.
In fact, we were talking before we started recording this. I have an adult son who's getting married in September next year, and he and his fiance, who's a lawyer, have been asking me what states they should be looking at to move to so they can afford to buy a house. And we're seeing a lot of that in California right now. Supply of homes available for sale is about the same as we're seeing nationally. And it's funny, the median days on market, in most of the country, it's actually a little bit up year over year, taking a little bit longer. And in California, actually down. So if you're getting a property to the market and you're pricing it appropriately, it's moving pretty quickly.
Yeah, I'm headed to a listing appointment after this interview, so I hope we price it right to move it in that 18 days.
And this is showing you in stark relief what I was just talking about with my son and his fiance. Those red areas, and this is some research from Freddie Mac, red areas are where population is moving out, green areas where population is moving in. The LA, Orange County, San Diego regions, but certainly the Bay Area in California, Seattle, Portland, the major urban areas on the East Coast. And look at Florida. It's kind of a tale of two parts of the state. The southern part of the state, people moving out, but everywhere else, people moving in. So for people that are looking these days, the California trends have been people moving off the coastal areas or out of the coastal areas into more of the central part of the state, a northern part of the state, or moving out of the state entirely so that they have the opportunity to buy homes. And the work from home environment that was created during the COVID pandemic is enabling a lot of this. You're able to move your job with you as you look for a lower priced place to live.
So this is a fascinating breakdown on this. I appreciate this, Rick. And some of this is no surprise. We've been hearing about the exodus out of certain spots in California. But what's interesting to me is to see the net migration, the positive net migration into Alaska. That people are actively choosing to go there. Alaska is beautiful. I'm not picking on Alaska, but people are actually choosing to go there.
There's a little red dot in Wyoming and Montana. They're probably moving to Alaska from there.
There you go. There you go. Those are the only ones.
In Montana are really fed up with all the Californians moving into their states.
They're not moving from the tip of Florida. I'll tell you that.
No, they're absolutely not. But yeah, I was in South Dakota last summer, and my Uber driver was sarcastically noting that he didn't realize he had moved to Utopia. And he was talking about the fact that people from more expensive states, particularly California, were moving into South Dakota of all places.
So funny.
Which, by the way, is a beautiful state in the
Right.
spring and summer. But the spring and summer season lasts for about 4 weeks.
Rick, your unbelievable amount of data you've run through there. Amazing perspective. So having covered that for fourth quarter 2023 and looking back, now in your crystal ball, where do you see things moving forward into 2024 for the housing market?
The word I would use to describe 2024 is probably boring. Historically, every time the Federal Reserve has announced that they're done raising the Fed funds rate, we've seen mortgage rates start to trickle down. And I do believe that'll happen next year. I don't think we get down to the fours, but it's not out of the realm of possibility that we're down in the high to mid fives by the end of the year. And it'll be a gradual, slow decline. That'll bring more buyers to the market first before it brings more sellers. And I think we'll continue to see new home sales do very well. So I don't think we see much change in the volume of sales next year. It might go up slightly. Maybe we get back up to that 4.3 million number I was looking at for this year. Would not be surprised if we see 700,000 or more new homes sold next year. And I do think we wind up seeing prices go up by a few percent, just because there's going to be, again, more demand than there will be supply until we get those mortgage rates back down into the low fives and people feel comfortable selling their house knowing that they can afford to buy something else.
So all those YouTubers talking about a housing market crash to get subscribers and viewers and all the views, they're going to have nothing. They're going to have to continue to talk about how it's coming down the road. It's not going to happen in 2024.
Anybody who's selling you something based on a housing market price crash, you don't want to buy. You probably want to run as far away and as fast as you can, because they're selling snake oil. The market dynamic. Look, we have the largest cohort of young adults between the ages of 25 and 34 in the history of the country. They're all getting to an age now where it's time for them to form households. Most of them prefer to live indoors. So they're going to look primarily for something to buy. If they can't find that, they're going to look for something to rent until they can buy. The market dynamics just don't support the notion of a home price crash. If we happen to have a more severe recession next year than most economists are projecting, if it's deeper and longer than what we're anticipating, unemployment goes up over 6%, you could have some fallout in the housing market. But if you do, it's likely to be more localized than national. And so it's just important to know what's going on, where you're looking to buy or where you're living, more so than it is to look at the national headlines.
But you hear that we have a shortage of housing overall that came about during the Great Recession. And the numbers range anywhere from 3.5 to over 5 million housing units were short. And we all know the story of the builders working to get production up. Household formation came back up 1.3, 1.4 million households a year, back up to normal levels. We've got a long way to go to catch up on that backlog.
We have more big updates coming from Rick Sharga, Dennis, and others. Make sure you subscribe to this channel so you don't miss out, and subscribe to our free weekly email newsletter, and we'll gently deliver those updates to your email inbox. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.